Hi, this is Ferre, and sitting here with Swenson of TaxSaleSupport.com with a short video for you guys about the top 5 mistakes that investors make.
Yeah, this is actually a question we get a lot. What mistakes can I make? What are potential risks? And so we decided to go over the top things that you need to avoid if you're getting started with tax liens and deeds.
Yeah, some people feel like you can't make mistakes, which we see that all the time. There are actually a lot of different mistakes that a person can make. In fact, that's one of the ways you learn is by making mistakes. But if you'd like to avoid that, here we can give you some examples.
Yeah, exactly.
Also, I think that nobody wants to lose money, but it still happens all the time.
Yeah, that's a good point. I mean, I think there is a myth out there that you could buy any tax lien or any tax deed and it's a great investment, and that's just not true. There's a lot of risk out there, but there's a huge amount of profitability. It's just avoiding that risk.
Yeah. Most of these mistakes happen from ignorance.
Yeah,
I think. So what we've done here is we've got them. We're listing them down, starting at number 5 and working our way up to number 1.
Yeah, exactly. So if you guys go ahead and avoid these mistakes, you guys will be ahead of the game when it comes to the tax sale game.
All right. So starting off here. Mistake number 5 is they buy property without checking the holding cost or quiet title fees.
Yeah, exactly. Holding cost is going to be any cost that you're going to have to pay after buying the property. So this could include things like property taxes. If it's an HOA, that can include HOA fees, any type of maintenance fees, anything that you're going to have to pay out, especially if you have, let's say it is a structure and you have something like, power and water.
Yeah, really, it's about knowing what your exit strategy is going to be and the costs that are going to be involved. For instance, if you're going to pursue quiet title, you need to know about how much that's going to cost roughly, so that you can kind of account for that when you're preparing to buy the property.
Yeah, absolutely. And even having that kind of worked out beforehand, because we're going to be including that within our cost as we're evaluating the deal.
Yeah. So the mistake somebody makes is they buy a property somewhere and they don't know that there are a bunch of fees that are involved, or they buy a property and they believing that they think they can just turn around and sell it for market value to somebody, not realizing they've got to take it through quiet title and all these other things, or simple things like that.
Yeah, in fact, I even just answered today a question on YouTube where somebody had, so can I just get title insurance? Well, no, that's going to be part of the process as well of going through quiet title.
Yeah. These deeds are not eligible for title insurance by most title insurance providers.
Yeah, so you're either going to wholesale it, where you're selling it to someone else that is going to do that, or you're going to be doing that yourself. So if you are going to be doing that yourself, you're going to want to figure out those costs beforehand.
Yeah, because if you account for them, then they're not a problem. But if you don't account for them, then they can mess up a deal, especially if you've already paid too much for a property.
Yeah, that's a good point.
Yeah, which that didn't actually even crack with the top 5 was paying too much. It's actually just above there.
Yeah.
The 4th mistake, though, and this is one that's fairly common. They buy property with large liens against it, and we don't mean just any liens. I probably should have been more specific there in saying government-issued liens.
Yeah, when we buy properties that have gone through judicial foreclosure, that means that they've pretty much been eliminated of things like mortgages, judgments, non-governmental liens, but things like state liens, even IRS liens, but usually most common are things like city liens can still stick to the property after the tax sale foreclosure and the judicial foreclosures. So because of that, we need to research every property we buy to see, is there governmental liens, and if there is, how much do they cost?
Yeah. In fact, that is one of those amazing things. Those liens can survive any foreclosure process. Really, there's something you have to deal with. And so, if you buy a property that has a bunch of those liens against it, you are kind of stuck with that issue. And you're going to have to be the one to deal with it. Not a problem, though, if you already know what it is, and if you've already, in some cases, you might find properties that people avoid just to find out that the liens are really no big deal.
Yeah, in fact, to give you guys one extra little tip, if you do find that there's governmental liens, contact that government authority and ask them if they're willing to negotiate the amount of the lien. We've been able to get liens reduced down to 20% of the original cost of the lien by negotiating that with the city.
Yeah, usually these debts are so delinquent to the point where if the city can collect anything on them, they're happy to do that.
Yeah, but you don't want to buy it with just thinking that the county or the city or somebody's going to do that. Yeah, exactly. So you want to work that out beforehand, because we've seen people that have purchased properties that have a $10,000 demolition judgment against the lien, and suddenly the property really doesn't have a lot of use because there was a building lot with now a $10,000
has a $10,000 lien attached to it. Yeah, so that is a mistake, and it's also an easy one to avoid. If you can just do a little bit of property research. You're basically looking into the title research.
Yeah, in fact, it's what we train our students in our membership program called the Investor Title Search. You can also have a title company do that for you as well, but that can be pretty expensive, especially if you're researching a lot of properties.
Yeah. These are properties you haven't bought yet, definitely. So, mistake number 3 that we see investors make is they buy a property that has no real use or value.
Yeah, and to be honest with you, some tax sale list, a majority of the list, or at least a good portion of it, is going to have these type of properties. These could include things like side lots, small strips of land, all of those kind of junk, irregular type properties that really have no use and value.
Yeah, in fact, in a lot of places, these properties just get cycled through the system over and over again. They end up on the county rolls until they get purchased somehow, and then they end up on the county rolls again because somebody eventually lets them go to foreclosure. You've got to avoid junk property, and there's some easy ways to do that. You just basically make sure that the stuff you're buying has some real world use. Value. That's it sounds simple, but it is.
Yeah, when we talk about use, if we're talking about a building lot, it can be built upon. If it's agriculture or commercial, it has some type of intended use. It's not a type of property that has no use. You can't build on it. You can't do anything with it. It just sits as it is.
Yeah, like for instance, side lots and stuff are good examples of that. Properties that are also dealing with water issues, like drainage and stuff like that, are the same way. There's a lot of properties you can't really do much with, and we want to avoid those.
A good tip to help you with that is going to be the size of the property. If we're looking at a something that's under 1/10 an acre, we're going to need to look a little bit more into it and see if it is buildable or does have some type of use.
Yeah, if there is less than 1/10 of an acre, generally that's about the size that a trailer can sit on, right?
Yeah, well, in some areas it'll be a little bit. They have some lots that are a little bit smaller, but in most cases, if it's going to be smaller than that, you're going to really want to look into it and make sure it does have some.
Yeah, if we're talking square footage, I think about 44,000 square feet is what an acre is, and so I believe we're talking about less than 4,000 square feet around, or 4,000, maybe 4,200 square feet or less is about the size. Now, mistake number 2 for tax sale investors, and that is they buy tax liens without checking the roll-up amount.
Yeah, and this is the big one for tax lien certificate investors. Especially in certain states. Certain states are more notorious for their roll-up amounts than other states. You've really got to check this in states like Florida and Arizona and some of these other states where that roll-up amount can add up over, several, over many years.
Yeah, what we're talking about here is Florida, for instance, has a 2-year redemption period on tax liens, and so you should be able to foreclose on property after 2 years. However, a lot of properties this hasn't happened on, and the longer a property sits and doesn't go through foreclosure, the larger that amount that's owed in order to foreclose on it is required. That amount just continues to go up, and so it makes sense to foreclose as quickly as possible. But if you don't, you can end up with properties that have many years of delinquent taxes that are owed. And one of the issues with trying to foreclose on a tax lien is the taxes are always going to have to be current in order to foreclose. that means that you're going to have to check for whatever else is owed on the property because you're going to have to pay that one way or another in order to foreclose on it.
Yeah, exactly. So, when we're looking into these, we're going to look into how much is the total roll-up and make sure that, because we're going to have to pay that amount off to foreclose on the property, like Shade said.
Yeah, so, we're going to have to look back and see how many years delinquent taxes, are owed on this, how many different liens are there in the past, and then we have to account for how much those liens are if we're going to buy a lien against this property because, there's a chance that it'll just redeem and none of that will matter. But if it doesn't and we have to foreclose on it, then we want to know what that cost is going to be because we don't want to end up with a lien against a property that's not worth foreclosing on or has something weird with it.
Yeah, absolutely. I mean, that's where suddenly your tax lien, isn't worth foreclosing on, and it's not worth it to any of the other lien holders that own liens on that property to foreclose on it, and so suddenly no one forecloses on it, and so you never get paid back.
It also may require additional investment. The person that, that bought the lien may not be planning on additional investments, and so suddenly they're looking at needing to make significant additional investment in order to foreclose on the property.
Yeah, so with tax liens, either the owner is going to pay us back or we're going to have to initiate the foreclosure. When we initiate the foreclosure, we've got to pay off all those other liens, and that's where it's really going to come into play.
Yeah, so that's definitely a mistake that we see people make, is buying liens there without checking that rollup amount. The number one mistake, though, is they buy property with homes or structures on them sight unseen.
Yeah, now this doesn't apply to tax lien certificates like it does to tax deeds. This was really where this comes into play, and this is something that we've seen happen. We have people contact us after they've made this mistake, begging us to try to help them in a situation that's almost unhelpable. But this is one thing that we stress to all of our students, all of our coaching students, before ever buying a structured property.
Yeah, if you're going to buy something, if you're going to buy property that has some kind of structure on it or improvements, you have to do some kind of an on-site evaluation, whether you're doing it yourself or whether you're sending somebody there to do it for you and you're getting images and everything of it. It doesn't really matter. You just have to get that much of it done because you can't trust 10-year-old pictures from the internet, or 5-year-old pictures from the internet. You really can't trust even 1-year-old pictures from the internet.
Yeah, exactly. We need to get current photos really within a week, if not even sooner, of when the auction is taking place, so that we can see exactly what the property looks like as soon as we can to when we buy it.
Yeah, especially when there are improvements that are on a property. The condition of those improvements is something that we are committing ourselves to when we buy that property. And so how much it's going to take is also something that we need to be aware of when we buy that property. Otherwise, we're just buying it blindly. And it may require way more than we're willing to put into it. It may be a complete teardown, and you're not planning on that. So you don't want to get mixed up with a property that you're looking to buy, but you're unable or unaware of what the condition of the property is.
Yeah, now we understand that not all of you are going to be able to go out there and look at the property yourself, especially if we're doing some type of online auction, if we're buying somewhere out of state. So we're going to give you a tip on somebody that you can contact to go out and take photos for you. It's worked well for us, and these are going to be handyman. Now, part of the reason we contact a handyman is because, first of all, they understand fix-up. They understand property. And so as they go out there and take the photos of the property for you, they are going to have a good idea of what actually needs to be done. The roof looks like it's got issues. I can see issues here. I can see something here. In addition with that, they're also going to be the person you can have go and change the locks, clean the property out, take care of things once you do buy the property. And so that's one strategy or one tip that we can give you in finding somebody to go out there and view your properties that we've used in the past.
Yeah, which again, if you're going to buy some kind of a structure, you're always going to want to make sure you send somebody by there so that you can get a good idea of what it is that you're buying before you ever buy it, and don't make that same mistake of buying structured property or home sight unseen.
Yeah, don't do it,
Just don't make the mistake.
Yeah, there could be a couple of cases where some of the counties have taken online photos, like in Michigan, but even there would still like to get a current photo if possible.
Yeah. So, hey, if you like this information, if you would like more, you're welcome to visit our website, taxsalesupport.com, and join our membership program, which you can do for just $39 a month.
Yeah, guys, it really is the very best value in education. We offer a 30-day money-back guarantee. If you don't like it, go ahead, cancel. We'll give you your money back. No questions, no hassle, no nothing. And it really does not only have thousands of auction lists where we're doing auction list each month, over-the-counter list, but you're also going to get access to, hundreds of hours of training, all of our workshop guides, really everything that we offer just in one package. You just get it all. It's not like you go there and now you have to do all of these other things to get different information. Once you become a member, you have access to everything.
Hey, thanks for watching. Be sure to subscribe for more videos like this and hit that like button if you like the video.
Yep, thanks again, guys.